Okay, welcome everyone to today's session. I hope you can hear me.
Yes, perfect. Please
Right.
go ahead.
So, so the session that we are going to talk about today is digital finance, innovation, and challenges. Now, so what is basically we are going to do in today's session? We will try to understand the applications of digital finance for businesses, individuals, and for the whole global economy. So, we will basically discuss three aspects with reference to digital finance. What are the current innovations? What are the challenges that different fintech organization or business or individual or even the government is facing? And then there are certain opportunities in the context of digital finance. So we will talk about regarding these different issues. So let's start briefly with that what basically is digital finance. Whenever we talk about digital finance, that refers to integration of technology into financial services. So we are having two dimension in that context. We have the thing digital basically talks about technological use, and finance, that is the all the financial services in that maybe include all the financial institutions, which basically enable online transactions. They help in digital payments and financial inclusion. So these are the different things. So what we have to understand before going into detail, that digital finance is something related with the use of technology in all the financial services, in terms of either you are making some transaction, you are making some payments, and you are involved in any of the financial activity. So that is the integration of technology with financial services. So basically, with digital finance too, it basically enables very secure, efficient, and accessible financial transactions. So that is the main motive for which now both of the organization and even the old financial sector is basically shifting towards digital finance, or we can talk about it like that can be termed as fintech, financial technology, or whatever you can use any term for that purpose. So basically the purpose is the we want to we must have very secure, very efficient, and very accessible financial transaction. So if we look the current scenario or the future projections, the global digital finance market is basically projected to surpass $15 trillion by 2030. So, in terms of potential, we can see that this market has a huge potential, and like this is a huge market that is coming up in near future. So, 15 trillion it will be going to surpass by 2030. So, basically, digital finance transaction from cash to digital payments. So that is something we can say that is a cashless sort of environment where all the financial institutions they are dealing in a cashless environment. So that is transition from cash to digital payments. Usually, the rise of fintech, that is the financial technology, the blockchain technology, and artificial intelligence in banking has a significant impact. And most of the business organization, and particularly the financial institution, are basically now moving towards these updated technologies, AI, machine learning, blockchain, fintech. So there is a huge rise of these particular thing in terms of banking sector particularly and financial institution in generally. And now even the governments and the major central banks they are adopting basically digital currency. So this is a move or is a shift from a very conventional sort of financing arrangement towards a more you can say that is towards a more digitalized or more IT based or more technology based transactions. So this is the current scenario of digital finance. That is the growth of digital finance across the globe. We can see that global digital payment transactions are expected to reach 10 trillion by 2025, and we have seen that in 2030 it is more than $15 trillion, which explain that this market have a huge potential, and most of the businesses they are moving or they are shifting from an traditional way towards the more digitalized way of financial transactions. And then mobile payments. The second important aspects of digital finance is basically mobile payments, that you are making certain payments, certain receipts via using the mobile devices, via using these devices. And that mobile payment adoption has increased by 30% annually. So each year there is a 30% increase in terms of the people who are moving from check based or moving from a manual or traditional way of making payments towards mobile payments. So that again shows that the digital finance or the financial inclusion have has been increasing at a tremendous rate. Then there are leading platforms in terms of all the digital wallets and in terms of all the digital payments. So leading platforms like PayPal, Alipay, Google Pay, Apple Pay. So these are basically the leading platforms which basically help all the digital financial growth. So these are very PayPal, Alipay, and Google Play and Apple Play. They are all the basically platforms. These different people that we have seen that payments are expected to reach $10 trillion, and these are the major platforms which help in terms of raising that payments and increasing these, either that is mobile payment or any other possible way. And that fintech market as a whole, fintech market, either that is mobile payment, it is personal to personal lending, or whatever the arrangement is there, that is valued over $300 billion. So that is again a huge market whenever we talk about financial technology in terms of how organization and businesses and particularly financial institutions are involved. And then there are key players in terms of facilitating all the digital finance. Let's say Stripe, Square, Revolut, and Financial. These are all the financial institutions. They are basically the modern fintech-based financial institution. What they basically do, they basically provide a platform where you can go for e-commerce, where you can go for we can use different digital payments, we can use different credit rating scores and so on. So that's why these key players, that these are the different platforms which can be used for financial digital financial inclusion. So they are basically the more revolving sort of institutions. And then lastly, AI driven financial solutions. So for AI driven financial institution, namely, let's say there are risk management tools, there are fraud detection tools, and so on. So there are a lot of AI driven tools which financial institutions are using. And what is the purpose, or what that particular uh, what these particular institute solutions are, they are reducing the cost by 25%. So on the one end we are getting all the transaction at a very cheaply rate. So they are reducing the cost. Let's say the risk management tools if you are using, so ultimately you can secure yourself, you can secure your transactions from these certain losses. So that shows that digital finance is a very growing and very potential field in a future. Now we move towards what are the different innovation that have been taken place during a certain period of time. These innovations basically, there are different forms of that how fintech have developed and how digital finance have shifted from a manual or very traditional sort of financial transaction to more innovative form, which is basically fintech evolution. So now the fintech evolution have started via digital banking. If you can see that all the banking system globally, like I'm talking about globally, they have shifted from a very traditional or very manual sort of banking based transaction to more digitalized. You can access via mobile phones, you can log into your account, you can make certain payments, you can make certain arrangements. So that is how digital banking have evolved over the period of time. And all the payments, investment tools, they are all are now basically uh, IT based. Like you are using digital banking. If you want to pay, you can use different, let's say, different platform. We have already discussed that Alipay and PayPal, these are the payment. So you can online from using the digital payment system, you can make certain transactions. And even there are investment tools in the form of cryptocurrencies and in the form of like international investment. If you are buying in stock, so you can globally invest in any sort of assets. Either you are investing in financial assets, you can invest in gold, you can invest in property, in real assets. So you don't have to move from one place to other. You don't have to come up with a very manual sort of making these financial arrangements. So all type of banking, payments, and investment are basically now technology based, and all the banking system has evolved from that very traditional way of making payments to the more digitalized way. Let's say there are different tools like Square, Stripes, and Robinhood. These are the different platforms, so digital financial innovation through which you can make payments, you can make some investments, you can make some digital banking. So fintech evolution have been a very phenomenal in terms of particularly digital banking. The another innovation in terms of digital finance is basically blockchain and cryptocurrencies. This sort of blockchain and cryptocurrencies, they have emerged as a more one of the leading innovation in digital finance. Blockchain technology. So basically, in blockchain technology, all the transactions or all the record is basically kept, and we can there is a certain digitalized way of monitoring the transactions. And then cryptocurrencies. We all know that now the digital currencies or cryptocurrency have a huge market, and all the transaction and assets are now basically even they can use for payment purposes and so on. So this blockchain technology in accounting, in recording, in making transactions, in getting detail of these transactions, and then the cryptocurrencies in the form of having certain assets. Let's say we all know that Bitcoin, that has a huge market in terms of cryptocurrency, which is based on certain blockchain technologies. Then Ethereum, Ripple, and there are a number of cryptocurrencies, and they are basically a huge market exists in terms of these cryptocurrencies in all around the world. Globally, people are investing, they are buying these assets, they are making these digital payments, and everyone is involved in this thing. So these are the main two innovations in digital finance. Moving further, the use of artificial intelligence and machine learning, that has been a very phenomenal growth in terms of digital finance. The use of artificial intelligence, the use of machine learning. So basically, for personalization, for making certain decision making, for getting detail of the different particular, let's say, investors, very credit agencies, or whatever. So AI tools are basically used to personalize that particular data. Then AI is also used for fraud detection. There are certain platforms, there are certain uh, credit rating and scoring agencies. So rather than a very traditional way of credit rating scores, which are there, let's say there are Moody's, Standard and Poor's rating agencies. Now there are AI-based rating agencies. There are AI-based and machine learning-based fraud detection process. They via blockchain technology, via artificial intelligence, and via machine learning. You can even detect the accounting fraud if there are organization and they are manipulating certain numbers, certain accounting frauds. So you can detect via artificial intelligence. Mainly Zest Finance and Kenshu, they are the major credit rating agencies, and they are basically dealing with all these credit rating agencies to for a better P2P lending. Furthermore, peer-to-peer lending. So there are platforms now you can access globally different pupils. It's not like limited to a certain boundaries, certain jurisdiction in terms of certain areas. Let's say if you are a citizen of a certain area or certain country, so can you can only borrow from the local institutions. Peer-to-peer lending basically helps you to connect borrowers with the lenders globally. So you can from the anywhere you can borrow that money. You can lend to any person on the basis of using these very digital financial tools. Let's say the lending club. The lending club is globally recognized as one of the prominent or leading peer-to-peer lending. We can where you can find different lenders and borrowers, and they can like just lending them. So globally, there is no restriction. In even the process of the lending in peer-to-peer lending, let's say the lending club and Kiva, they are very like they're not going for very detailed sort of analysis for that detailed documentation. So that has become, and you can now the connect with borrower and lender on a very global platform. And then regtech. Regtech is basically regulation based technologies. So now technology for regulation, compliance, and risk management have evolved over the period of time. So all the now regulations, before the regulation was like how the processes have been done and so on. Now there are regulations which are based on technological based and compliance with technology for the tool for risk management, how technology can be used, how regulatory aspects have been used, can be used for risk management. Let's say compliant advantages and chain analysis are basically the use of regulations in terms of technology in order to compliance in order to check risk management. So these are the different innovation in terms of digital finance over the period of time. Now if we can go to this particular uh, slide, so we can clearly know that how digital finance have emerged over the period of time. So let's say I'm talking about this particular e-commerce shares checked out by payment method. And if you check that how much is the share of e-commerce in terms of payment method, so we have 2023, the most recent, to 2027 forecasted. So we have this light color in terms of forecasted and this color in terms of whatever their current position in terms of e-commerce. So let's say if we move from here, prepaid cards, they in terms of e-commerce payment, their share is only 1%. Cash on delivery, only 2%. Uh, Bank-based lending, that is only 5%. Buy now and pay later is 5%. Debit card, 12%. And we can see that it is increasing over the period of time. Instant account to account payments, that is from one digital account, from one banking account to another account. So this much. Credit cards, 22 to 15%. We can see that how. And then finally you can see digital wallets in terms of making these transactions which are basically card linked and not card linked wallets, let's say cryptocurrencies and other methods of payment. So 50%, and then it is expected that 61% of the e-commerce payments will be from digital wallets. And currently, even you can see the current phenomena is that 50% of e-commerce payments are being done by digital wallets. So this whole scenario in terms of digital wallets, which is in digital finance, credit cards, instant A to A, account to account payments, debit cards, buy now, pay later. Other than this, cash on delivery and prepaid cards, the majority e-commerce transaction, they are based on digital finance. They are using any form of digital payments, any form of financial services, which is basically based on technologies. But most, like if you can see that majority, more than 50% currently, and in future 61% in future, these payments will be via digital wallets. And similarly, on on time of purchase, if you can see, so again this is digital wallets is 30%, and it is expected that it will raise to 46%, right? Point of sale share is basically 46 and 30%. So if we can see this projection in terms of 2027, which is forecasted obviously on the basis of the raw data, on the basis of past data, so digital wallets have a very exceptional value in terms of global e-commerce payments. So again, the new payment adoption, which is basically global non-cash transaction volume. You see the non-cash transaction volume that was 1,143.9 billion to 2,296 billion, which is almost double of the amount whatever the current phenomena in terms of non-cash transaction. And in 2027, which is a future, it will be double of the total amount in terms of non-cash transactions. So this that shows that the digital finance is going very rapidly and have a very bright future in terms of future as well. And furthermore, if we if we see that non-cash transaction volumes, the cards, which is basically this portion, 59%, then credit transfer, which is 15%, then direct debit, which is only 5%, and checks, which is an instant payment by e-money payments. You see this portion 21% to 28%. So if we can check this, that all the cards, either that is debit card and that is credit card, and then e-wallets are instant payment via e-money method, they are basically more than 70% in terms of non-cash transaction. And new digital payment mix, which is basically instant payment and e-payment method, including the wallets as well. So there is a certain growth, and almost in a period of only 5 years, the amount will be double in terms of whatever the global non-cash transactions. This again, this thing that is the basically the global comparison with reference to different regions. If we can see this region, which is uh, Asia Pacific, we have instant payments, this portion, which is instant payments, 26%, and then cards and credit cards, which is 53%. Latin America, so 28% in terms of instant payments, and then the card and debit and credit card transactions are almost 40%. So that it's mean Asia Pacific are using more in terms of debit card or credit card based transactions. And that's this North America, which is usually the traditional methods to new instant payment method. So that instant payment methods and e-money wallets is basically a very phenomenal way of the total transactions. And then this European region, then the Middle East, and then the whole global. And this is the current 2023, and then this will be how it will be going to move from 2023 to 2028. We can see the checks. This checks is a very minimal portion in terms of global payments. You see, it is predicted to be 8%, 5%, like only 2%, 5%, 3%, 5%, and 5%. So, very less people are now using the check based transactions. So, mostly they are moving from either they are using the cards, which is debit and credit cards, they are using credit card transfers, they are using direct debits, paid transactions, they are using e-money, and they are using instant payments. So that shows the globally overall the region. Like if we move, if we can talk about this, the majority of the regions in terms of globally, they are moving from a traditional mix to the new traditional payment method, which is the new method which is based on digital finance. Furthermore, this is again the percentage and how it can be uh, worldwide non-cash transactions in terms of enterprises and retail volumes in billion from 2010 to 2028. You can see a very drastic changes in terms of uh, particularly if you can see the every region 221 billion dollars shifted from 140 $1,457 billion in 2022 in Asia Pacific region, and similarly in terms of other regions, right? In terms of Middle East, in terms of Latin America, in terms of North America and Europe and all these. So this is the drastic changes over the period of time. The globally it has increased 16%. The before it was 666 billion market, and now that is 2832. So that has increased in multiple times in terms of the non cash transaction. And this is the last the current scenario of the market. Global buy now and pay later, BNPL market. So we can see buy now and pay later, online and point of sale, POS. You see, the POS is decreasing. We cannot say that it is not like using, but buy now and pay later market has online, in terms of online we can see it is now having very increasing trend. USD billion. It was 13 billion market in 2022, and it is forecasted that it will be 115 billion dollars market by 2033. So that is again a very rapid increase in terms of which is almost 115 billion dollars from 13 billion dollars. So like 102 billion dollars increase in terms of a very short period of time. So that shows that this buy now and pay later, which is one of the digital finance payment method, has also a very significant growth in terms of online transactions. So that was basically the whole scenario of whatever the digital finance exists today in today's market. Now we move towards the different challenges in digital finance. We have talked about the innovations. Now we are moving towards the challenges in digital finance. Now, this digital finance have different challenges at the same time. Although it has a very innovative market, it have a lot of potential. We have talked about it, but there are few challenges. Let's say the first and foremost is cybersecurity risk. We have seen that there are increased data breaches and cyber attacks, right? So we can say that this market, this digital finance market, has a huge risk, which is a cybersecurity risk. Let's say if we talk about these attacks and breaches, we have a number of examples. Let's say this one, Equifax data breach in 2017, September 2017. That organization has exposed personal data of approximately 147 million US people. They have uh, breached the data security, and they have published 147 million people's personal data to certain authorities. So that shows that there is a huge risk that your personal data can be lost. And even this Equifax is one of the platform which is used for these all these digital finance. And then Capital One data breach. The second important or biggest scheme in terms of cyber security. Let's say that was one of the credit union, and they have issued in 2029 100 million users of digital platforms their data to US based people. They have uh, uh, used their data, and they have breached the security or the breach the whatever the database requirements. They have breached that, and they have used the data of 100 million people in 2019. So that shows that cybersecurity risk is one of the biggest challenge whenever we are talking about digital finance. And then there are privacy concerns. Let's say Facebook Cambridge Analytica. This Facebook's Cambridge Analytica is one of the major issue that has been taken place. the, the 50 million dollars euro have been lost to these very people. And then this Facebook Cambridge Analytica, that was one of the biggest scam of that has happened within the 2019 US election, where a lot of the personal information, Facebook based information regarding the general public, their characteristics, and so on, in terms of, and that data has been used for US elections. So we can see that there are privacy concerns, that your personal data can be hacked and can be used for any particular objective. And then Google, that is basically general data protection regulations. They have fined Google almost, they have fined 50 million euro to Google. Google also have done that particular US election. They have used that personal data of the people from the whatever the, let's say you save certain Google information, your passwords, your basic information, your gender, your age, your area, where you can have an your location information and everything. So on the basis of general data protection regulations, they have fined Google about 50 million euro on that data breaches. So that there are privacy concerns in terms of whenever we are talking about whenever we are talking about these privacy concerns. Furthermore, regulatory complexities. Now there are now we are talking about digital finance in a global context, so there is no other barriers. But in terms of regulations, when we are talking about the whole region and regulation across regions, so there are varying regulations. Regulation in US, regulation in African countries, regulation in Middle East countries, regulation in Europe, they are totally different. Let's say the GDPR, the General Data Protection Regulation of European Unions are totally different from which whatever they are in US based. Further, let's say cryptocurrency have a huge market, but in China, cryptocurrency regulation are totally different. Let's say uh, you cannot make any legally. It is not allowed to use a cryptocurrency for making investments. Rather, China allow cryptocurrencies for making payments. So that is not allowed to have an assets and asset investment in terms of cryptocurrency. So this is how the cryptocurrency regulation in China, cryptocurrency regulation in US, cryptocurrency regulation in other European countries, in African countries, in Latin America, in North America, they are totally different. So that there are certain regulatory complexities in terms of, and that is a huge challenge. And then digital divide, there are certain limited access in underserved areas. Examples like sub-Saharan Africa, US rural communities, their digital device, the very few people have an access to the internet and all the digital devices. So digital divide is very much in terms of the different regions of the in terms of different region of the whole globe. And then financial literacy, there are complex products, cryptocurrency, blockchain technologies, and other things. So there is a risk that untrained users. So usually you can see an ad and you can involve in any P2P transactions and so on, but that makes a very risk in terms of those people who don't have that financial literacy, who are not well aware about these financial schemes and so on. Let's say FTX collapse, which is one of the biggest collapse of the world, which where like million of people have lost their investments. So this is just because of the there are huge global schemes, financial schemes that are happening. So this is just because of the people have very little financial literacy. So that is a biggest challenge, that how globally we can increase the financial literacy in terms of having a very trained user, so they have all the information and they can make an effective decisions. Again, if we see this data, there 22% financial fraud have due to the cyber threats. So again, this is a biggest challenge in terms of cybersecurity. 22% fraud, financial frauds are increasing. Although there are digital payments, although there are very formal way of B2P or blockchain technology, AI, machine learning are there, but still financial fraud and scams are increasing over the period of time, which is 22%. Data breach contracts, let's say we have talked about Google and Facebook, they have cost banks over 10 million per incidents for any breach. And there is a stronger encryption in AI driven security that is needed to meet that cybersecurity challenges. Then digital divide that we were talking about, there is a very huge digital divide, that how many people have access to internet basically. So on one side we have this particular data, and this is very strange, that 40% of the global population lacks internet access. So a majority of the people that even don't have an access to internet, and there are like the rest of the population have a very sophisticated tools they are using for that digital payment. So there is a very digital divide between the people who are more digitalized, and even there are people they are either not digitalized but they don't have an access to the basic internet, the basic tools for information sharing and knowledge sharing, rather than they are using these platforms for transactions. And then rural and regions that we are talking about, they find very struggle with financial technology or financial digital financial literacy and infrastructure. That is basically a big issue, that people don't have access to these digital currency, and they don't have that much digital literacy. They don't know about P2P lending, they don't know about AI based transaction, they don't know about. So there is a lot of digital literacy and infrastructure that needs to be improved. In that context, now we are moving to our third agenda of the day. What are the opportunities in that context? We have talked about there are certain innovations. We have talked about that there are certain challenges in terms of digital finance. At the same time, there are certain opportunities that we can use these opportunities on the basis of. So first of all, we can have a financial inclusion. We can include more and more people in terms. People though don't have access to even internet. So it's mean these people don't have access to all the other devices. So there is a need of financial inclusion. So there is an opportunity that there services of unbanked and underbanked population. So there is a lot of people they are unbanked. They don't have a bank account. Yeah, either they are underbanked populations. So there is a lot of a chance that we can use these very unbanked and underbanked population, and we can bring them into financial inclusion, and we can move them to the use of the different financial innovative sort of digital payment methods. Let's say M-Pesa in Kenya, that is one of the highly used device for making digital payments. Then Alipay, which is a global pay, globally can be used, and WeChat Pay in China. So these are the basically the different tools or different avenues that from where we can have access, and we can include more and more public in terms of digital finance. So a lot of market exists in terms of we have seen the growth, but there are few people are involved, so we can bring more people and include them in that financial system. So financial inclusion is one of the opportunity in terms of digital finance. Furthermore, digital finance, if we can use digital finance in all our transactions, it will increase our efficiency and it will lower our cost. So these are the potential benefits, both sides. We can increase our efficiency in terms of AI, in terms of blockchain technologies, in terms of machine learning. So they enhanced our efficiency. So if we want to increase the efficiency, we can use digital finance. So there is a certain opportunity. And if we want to reduce our cost, so we can use these different platforms. So automated reduced operational cost, we already know this thing, that whenever we are moving from an automation system, either that is in blockchain based, that is in AI based, that is machine learning based, so it will reduce your operational cost. Now less people are required, or even less procedure are required, and that is very fast and efficient way of dealing with different transactions. So obviously it will reduce our operational cost. Let's say Stripe, PayPal, robo advisors, like robo advisor, robot based financial advisors. Let's say robot based financial advisors and a real physical financial advisor. If you go to any financial advisor, you ask for certain financial advice, they will obviously charge you a huge amount. They will give you that advice on the basis of certain commission or certain payments. You make them, you pay to them, and then they will robot based advisors, they advise you, they help you in terms of your investment, making investment decision, in terms of your financing decisions, and so on. So this is how, if we are using the robo advisors or robot based financial advisors, so it will obviously have a benefit of enhanced efficiency, and it will be lowering our cost as well. And there is an opportunity that we can improve the user experiences. Let's say there are, we can come up with different apps, different tools which can enhance accessibility and transparency. We have seen that there are other examples like Chimmy and Apple cards. They are basically very easy to use, very accessible, they are very transparent. So there are a lot of space still available in terms of global market. So a lot of improved user experience purpose, we can develop different apps, we can develop different tools in order to uh, in order to take the account of these accessibility and transparency, and we can access to a large number of people and a huge market which is estimated to be $30 trillion in near future. And then the more foremost opportunity for digital finance is global reach. You can reach cross border transactions. You can involve in cross border transactions. We have seen that P2P, global remittances, P2P buying, point of sale, you are using e-wallets, cryptocurrencies, you are investing globally. So now we reach is very global, so we can invest, we can cross involve in cross border transactions and global remittances, like TransferWise and Ant Financial. These are the different financial based tools which can connect you with your global world. And then sustainable finance, sporting green finance initiative, all the digital finance, all the green finance is basically that we are using uh, uh, more technology based and very sustainable way of supporting financial initiatives like city impacts fund, trying crowdfunding. These are the basically financial initiative which are more long term, and they are basically affect uh, explaining, and they are basically very sustainable in terms of long term. So basically the future of digital finance, the whole future of digital finance is based on AI driven financial services. That is basically going to dominate the whole banking. So in near future, you will see that all the banking based transactions, banking based lending, banking based, all the process of banking will be AI based, AI driven. And then there is a greater adoption of blockchain and smart contracts, and similarly increased focus on cybersecurity and regulation and compliance. So these are the three main future domains of digital finance: AI based, blockchain based, and then cybersecurity. These are the upcoming future trends of digital finance. Now the digital finance have an outstanding success over the period of time. If we can see the impact of PayPal, we all know that PayPal is one of the digital payment method which connects the people globally, irrespective of jurisdiction, irrespective of any boundaries, irrespective of, so globally the people are connecting them. They are buying, they are paying, they are involved in e-commerce transaction, they are involved in digital payments and so on. So PayPal impact have increased, has a global impact on digital payments, and there is a huge amount of people they are involved in that PayPal based transactions. Then China's rapid adoption of mobile payment system. If we talk about mobile payment system, remember China is a leading country in terms of mobile payment system. Let's say WeChat is used, one of the major tool that is used for mobile payments. One of the interesting fact about China is 86% of Chinese use mobile payment system. So the cash base is only 14% of the whole Chinese population. So we can see that China's rapid adoption of mobile payment system. Now there is, if you travel to China, if you go to China and you ask from the Chinese people, they all the time they don't carry cash now, the hard cash. They basically all the time they have all the different tools, and one of the major tool is WeChat and other. So 86% of the Chinese they are using mobile payment system. So that shows that digital finance has a huge success in terms of how a traditional way of method has transformed to a very digitalized way. And DeFi platforms like uh, financial decentralized financial platforms, that have revolved over the period of time in terms of lending and investing. Decentralized platforms, like there are, if you can see, a lot of investment websites are available, a lot of apps are available where we can where we can involve in financial activities. So there is a lot of revolution in terms of lending and investment, in terms of decentralized financial platforms. So that all these three major stories talks about that digital finance has a huge success in terms of how has shifted from a traditional way to a very digitalized way. And the final thoughts on whatever we have discussed today is digital finance is reshaping the global economy. We have seen this, and we can witness from the data and all these things that digital finance is reshaping the global economy. And it have innovations which bring efficiency, but obviously there are certain challenges. So what is required? There must be a collaboration that is needed between governments, the fintech organizations and institutions and regulators. If they can sit together, different governments, different fintech technologies with different fintech institutions, their financial institutions and regulators, so they can come up with a very global sort of policy in order to handle all the challenges and opportunities with reference to digital finance. So this is all about regarding whatever digital finance and their innovation, different challenges, and different opportunity. So that was the agenda that we have talked about today. We tried to understand the implication of digital finance for businesses, for individuals, and how it has affected the global economy in terms of innovation, in terms of challenges, and in terms of opportunities. So, if there are any question, we can move to the question answer session as well.
Thank you